expert, along with my sidekick, Patricia Castillo. Say hi, Patricia,
Hi, everybody. Glad you're here today.
from sunny Southern California. And this is our home buyer, our weekly home buyer series, where we try to help people who are looking to buy homes, either get in their first home or if it's time to upgrade you to a new home. And we often have vendors, guests here, and we'll also talk about what the steps are in the process in order to go from not being a homeowner to being a homeowner. And both of Patricia and I have done that, and we're looking to share those um, opportunities with you as well. So we have 7 parts. This is part of a 7-part series. And this week's part is number 3, which is how to take advantage of a shifting real estate market because it's competitive. So Patricia, have you noticed when you make offers of properties, you're not the only buyer typically calling the listing agent?
Oh, yeah, absolutely. I mean, the real estate agents are all trying to be as competitive as possible to get their buyer's offer accepted. So it really takes a lot of initiation on your part as an agent and making sure that, you keep that communication strong right from the beginning because you want to set that tone. So yes, I have seen that scaling up for sure.
Yeah, and I think that buyers in regular residential markets today report that the average buyer is one of 5 offers. It was higher last year, actually, 7 or 8, but now it's about 5 offers in each property. And so buyers will look at properties, and then by the time they get to them, they'll find that they're gone and be frustrated. And the thing that I want to emphasize is it's a very competitive process, but like all competitive processes, if you work hard and prepare, you can win and use that to your advantage. So we talk about some of the areas, and literally just today, I have a property that we showed, I think, 7 or 8 times in the last few days. This is an industrial property, and we got multiple offers, and we're probably accepting one, putting it in escrow here today or tomorrow. That's an industrial property where things never really move that quickly traditionally, and it's because of the economic opportunity of buying property that it's become competitive. And I'll explain a little bit about that.
Mhm.
What I can tell you is that if you watch the stock market, what do you notice about the stock market? Is it up every day or down every day? Yes, is the answer, right? It's either up or down. It moves
Right.
very quickly.
Volatile.
Every day there's new news, and it goes up to the news or down to the news. It changes all the time. Real estate can't move that quickly. If you think about it, you walk out your front door, you look at a house, the value doesn't change that much because there's no buyers and sellers arguing over the price at that moment and then moving on to the next one. It's much more individual. Additionally, the value of a property depends on its ability to be financed, most commonly to get loans. While cash buyers are significant, most buyers are buying property because they can leverage their money by putting some money down and borrowing the rest. It makes it attractive to buy and control a big property or any property. And so, but the lenders will base the value of the loans based on the past sales of the last few months. And so it builds kind of a drag into the upward or downward movement of the value of properties. While properties might have moved up quickly this year, let's say 25% in value, like gasoline or food or other things, they couldn't go up because the appraisals, not all of them were appraised, but even the cash buyers could limit the increase in prices because they look at the data going back 2 or 3 months to try to establish what the value of a property was. Whereas with stock, all shares of Google are the same, all shares of Microsoft are the same. Not true in real estate. And so it's a very competitive market, and we want to take advantage of it. So, Patricia, what do you tell buyers that you talk to help prepare them for the competitive market so they can come out and be successful? What's 1 or 2 things that you share with them?
Well, the first thing is knowing exactly what they qualify for, especially with the changing interest rates, because we're not in the same range where we were last year, where we were seeing mid twos, high twos. Right now we're at about 4.5% for a 30-year fixed. So keeping in touch with the lender to make sure that the loan approval is still valid for the purchase price that they were originally qualified for.
Right.
And also, if you're qualified, let's just say you were pre-approved for a purchase price of 800,000. You're not, unless you have enough cash and wiggle room to overbid, you're not going to start shopping for homes that cost 800,000 because you do need that space to be able to basically offer more on your offer. So I look at my clients' financials and what they qualify for and what they're comfortable in an overbidding scenario. So if they're willing to go over, let's say 10%, then we need to make sure that they have that cash available. If the property doesn't appraise for that purchase price, then those are discussions we have ahead of time too. So how much are you willing to overbid, and what's your cap, right? Because at some point, you're not going to be overbidding for a property that you don't maybe absolutely love and absolutely want. So that also makes the decision on not just what you're financially capable of, but mentally, where's your mindset with this property?
It's funny. One thing I do when I make offers on properties, I have a lender do a pre-approval letter for the exact amount of the offer. And we always offer an odd number. So maybe we're offering, let's say, 785 or 786. I'll ask them to make the pre-approval letter 786. Because the listing agent, I think if you had a pre-approval at, let's say, 800 and you offer 800, they're going to wonder, can you go higher? In a competitive market, you want them to think you can at least, give you a chance at it at least. But when it's an odd number like that, they know it's not your maximum number. They just know that matches your offer. And it creates the opportunity for some dialogue to go higher. I know some agents prefer to have a pre-approval letter much higher than the offer. What's your practice? When you talk to a lender, do you recommend a certain number, or do you let them dictate that? Or what's your best advice to a buyer?
Well, I want to see what their highest is that they qualify for. Right. And not just that.
You want to see that. You didn't necessarily
right.
show that to the seller.
Right.
The listing agent.
Right. I want to see that first.
Right.
I also want to have a conversation with my client and make sure that they're comfortable making that payment, because they may be qualified for a monthly payment of, let's say, $3,000 or $4,000, but they may not want to have that high of a payment. They may want to, they may feel more comfortable within their budget. There might be some expenses in the future coming up, like school loans that have come out of deferment or whatever the case may be. So I want to make sure that not just that they're going to get their offer accepted, but that going forward, they're going to be comfortable with that mortgage payment.
Yeah. Yeah. And I think a lot of it is knowing what your buyer can do up front, and then you can create a game plan from there. If you don't know what you can do, what you're comfortable with, then it just becomes a struggle to put together afterwards. Mm-hmm. Now, the rates they've jumped up, they jump down, they jump up, jump down. How do you handle your buyer's nervousness when they hear the news and they watch some video that says there's a housing crash coming? How do you handle that? What do you do to explain to your buyer, prepare them for the market that we're in?
Well, I basically go back to where we were at, let's say a decade ago. I mean, rates have jumped up, but of course, when you hear on the news, rates are rising and rates are increasing. Of course, the buyers are going to get nervous about that. But if you look back where we were at in 2004, 2005, the rates were a lot higher. So we're not in that scenario where rates are at 8% or 6%. So 4.5%, that's still a low rate. Of course, it's not as good as 2.5% or 3%, but it's still a lower rate. So what I say is if my buyers are closer in the process to looking for homes and going out and starting the search, then I want to also talk to the lender to make sure that there's enough information they have as far as their underwriting goes to possibly look at locking in a rate pretty soon. Because with the market, we're not sure if the rates are going to go higher or they're going to go lower.
Right. I think you can't really predict the future, but you can be prepared for it. And I think that's the key, right? We want to prepare for the future and know what happens if. I think just this week, rates jumped up about 0.25%. The Fed raised rates and affected the mortgage rates right away. And to a buyer who's locked in, it doesn't mean anything as long as they close within the term of their lock.
Right.
To a seller, it doesn't mean anything if the buyer's locked in, as long as they complete the conditions to close the transaction. If they don't, they're going to have a problem on their hands. And I know I have a closing right now that every day they're just screaming at me to get it closed. We're having a problem getting the payoff. And it has nothing to do with the seller. The buyer's money is in escrow ready to go, but the lenders is scaring them, and I think rightfully so, that every day they want to get that loan closed and sold because they're worried about the implications, and things can get very tense. And so one of the things I try to tell people also is that real estate can be very emotional, but business is best handled when you eliminate emotions and make logical decisions. As much as possible, you want to You know, you can my time because you can call me and yell at me all you want, call me names, that's fine. But when we're done, let's regroup and figure out what our game plan is and execute our plan. Because if we're emotional, we might make a decision that we'll regret not buying a property. There's a couple properties in my neighborhood that we didn't buy a few years ago, over the years, actually the last 10, 15 years. There's one, two, three houses we made offers on, and I just didn't push it aggressively enough. And back in those days, you know, the difference was maybe $10,000. It seemed like a lot of money. Well, today, whatever we're looking to buy has gone up by $1 million. So the $10,000 I didn't spend then, you know, is trivial. At the time, though, I made a decision based on the numbers and what I could afford. So it's hard to go back and second guess. But I'm glad I didn't make the decision emotionally. I knew the numbers, I knew what I could afford, and we did our best. And, you know, sometimes that's just all you can do. So it all works out in the long run.
And you still made a good deal on your home that you purchased.
Fantastic.
Remember that story?
Yeah, and it's a fantastic deal, and it was a perfect house for us. We raised a daughter here. I have people all the time who say, "Wow, you know," because we live in a neighborhood where everybody's involved in the neighborhood, and we have people walk by from other neighborhoods to go through where we live, and so I definitely feel like it was a life-changing, one of those great decisions in our life. But again, part of it is we made it that way as well. So to somebody looking to get into the housing market, this is a chance to take advantage of it. You know, I think that one thing that's going to happen is buying a house, you know, is normally a 6-month, a year process from when you decide to get started. And you have to start the process. We talk all the time about making sure you know what you can afford. And then before you start looking, making sure that if you find what you like, you're able to execute. Usually that means be pre-approved. Excuse me, and I muted myself there, Patricia, on purpose. We had a little muting problem before this call.
Yes.
But you got to get pre-approved so you're ready to go to make yourself as strong as possible. Talk a little bit, Patricia, about what you do to help prepare buyers looking to buy, so when they find their dream house, they can execute and actually get it.
Sure. So, I mean, last week we were talking about credit repair. We had a credit specialist on the call, and so I'm going to kind of just condense all of that information. But when you're first starting, you want to make sure that your credit is in line so that you can have a higher FICO, which will essentially get you the best interest rate. Some people think that, you know, they have credit cards, they're making their payments every month, and their FICO score should be a lot higher than what it actually is. But that's not true. And so just learning about credit and what increases your FICO score is very helpful. So the first thing that we do is start looking at their approval, get their financials in order, make sure that all the information is up to date. So recent bank statements, recent W-2s, pay stubs. And I'm right in the middle of all that with the lender that I work with. So that way we're all in the loop, we stay connected, and we stay in communication. So up front, I let my buyers know that we're going to be talking very often. We're going to become best friends, making sure that they have all of their documents easily accessible too. And also, if any buyers are getting, let's say, something out of the, you know, your traditional financing, like maybe they're getting gift money, I want to make sure that the money is going to be available too. If it's coming out of their retirement, let's say, then I want to know what that process is going to take if they're going to use that final down payment and it's going to be coming from their retirement. Because once you're in escrow, the clock is ticking, right? And you have to perform. And so you want to make sure that if you are getting your money from, let's say, as I mentioned, a retirement account, that it's going to be easily accessible and you're going to be able to withdraw it in a matter of days, or possibly get started on that sooner. So those are things that I start asking ahead of time. Where are you getting your financing from? Is it all coming from the loan? Is it coming from different sources? If you have different sources of financing for your final down payment, those are all little details that could really hang up your transaction. So it's really important to get all that information up front. And I know we talked about this before too, as far as the location of the property. If they're looking in areas that are very, you know, that are on the hillside, that have a lot of brush around, you want to make sure that you also get even if it's preliminary, but a quote for homeowner's insurance, because it's just like buying a new car. If you buy a nicer car, a fancier car, you're going to have a higher premium on your insurance. So those are things that we start looking at in the beginning, and all that is preparing the buyer for the future expense and the future cost of basically home ownership, because it's not just going to be your mortgage payment, but obviously other things that are going to factor in, like your homeowner's insurance as well.
Well, the more prepared you are, the more able you are to take advantage of opportunity when it comes your way. Right? So always emphasize the work is done before the offer, the real work. The offer is part of it, but we want to work with you, want to coach you, want to help you, encourage you to get that paperwork done. For some people, it's filing your taxes. I'm self-employed as a real estate agent. We're self-employed. So my taxes are done. I want to buy some investment property this year. I pushed really hard, change bookkeepers, change accountants, change software, got my paperwork done in December. Boom, I was on it. Filed my corporate return March 15th was the deadline, and my personal return at the same time. So not the 15th. The deadline's the 15th. We got it done last week on the 8th. Mm-hmm. My point is, I'm ready to go. And there are some buyers who may or may not be able to buy property. They're going to get drawn out. They'll be hesitant. If there's something that's available that's a good deal for me and my family, we're going to jump on it right away. So we were here to help you as well. Patricia, if somebody wanted to talk to you about getting ready to buy a property or getting those steps together, how would they reach you?
So I can be reached on my cell phone. That's the best way. And my phone number is 323-365-9909. Call or text.
One more time.
323-365-9909.
I'm Bill Gross, and I'm available on social media at Bill Gross EXP. I work with Patricia closely. We talk almost on a daily basis as a team. So if we can help you in any way, either get yourself started in the process of the planning, the preparation, the credit work, think of the hard work up front is what's going to give you wealth at the back end. We're here to help make that happen. So again, Bill Gross, Patricia, we do this every Wednesday at 5 p.m. Pacific time, 8 p.m. Eastern time. Hope you make this day your best day ever. Thank you so much. Thanks, Patricia, as always.
Thank you so much. Thank you, Bill. Bye-bye. See you next time.